Medical Properties Trust, ticker symbol MPW, is one of the most talked about REITs in the healthcare space. Founded in 2003 and headquartered in Birmingham, Alabama, MPW specializes in owning and leasing hospital facilities around the world. Its business model is based on triple net leases, where the tenant pays property taxes, insurance, and maintenance, reducing the burden on MPW. At first glance, this sounds like a stable and cash-generating investment. But the story behind MPW is far more complicated, and in this deep dive, we're breaking down everything you need to know. MPW is structured as a real estate investment trust, which means it must distribute at least 90% of its taxable income to shareholders in the form of dividends. For years, this attracted income-seeking investors who were thrilled by MPW's sky-high dividend yield, sometimes over 10 or even 12%. But those yields often came with major risks that were hiding in plain sight. Let's talk about MPW's portfolio. The trust owns over 400 hospital facilities across 10 countries, with its largest tenant being Steward Healthcare. In fact, Steward made up nearly 25% of MPW's total revenue, raising major red flags about tenant concentration. That risk materialized in 2023 when Steward ran into financial issues and struggled to pay rent. Suddenly, investors realized just how exposed MPW was to a single operator. The stock price crashed, and concerns about the sustainability of MPW's dividends started to dominate headlines. Now let's talk about the dividend. MPW had been paying a generous quarterly dividend for years, but cracks began to show when the payout ratio exceeded earnings. In response to financial pressure, MPW cut its dividend in the third quarter of 2023. This sent another shockwave through the market and shook investor confidence even further. As of now, the dividend yield remains high, hovering around 12%. But that yield is inflated by a falling share price and growing doubts about long-term sustainability. Speaking of the share price, MPW has seen a dramatic decline. At its peak in 2021, the stock traded above $21 per share. Today, it trades under $5, a nearly 75% collapse. The decline wasn't just about market sentiment. It reflected real concerns about tenant solvency, rising interest rates, and MPW's aggressive acquisition strategy, which left it over-leveraged in a tightening credit environment. Let's break down the debt. MPW is highly leveraged, with total debt exceeding $8 billion. In a low-interest environment, this wasn't a problem. But as rates rose, MPW's cost of capital increased while its rent collection became less reliable. This created a vicious cycle. The trust had to raise capital to stay afloat, but dilutive equity offerings and expensive debt only weakened the balance sheet. The result was a loss of trust from both retail and institutional investors. So why would anyone still invest in MPW? The bull case hinges on recovery. If MPW's major tenants, especially Steward, can stabilize, and if the trust can reduce debt while maintaining enough cash flow to support even a reduced dividend, there's upside potential. Some argue the stock is deeply undervalued, trading below net asset value, and that the worst is already priced in. MPW's international assets in Europe and Australia also provide diversification and potential growth if managed correctly. However, the bear case is strong. MPW's business is tightly linked to the financial health of hospital operators, many of which are under pressure. The trust's lack of tenant diversification, high leverage, and recent dividend cut are major warning signs. With continued uncertainty in healthcare policy and interest rate movements, MPW remains a high-risk, high-reward bet. From a NAV standpoint, MPW has eroded significantly. Book value has declined, net operating income has weakened, and analyst ratings have grown more skeptical. This is not a typical buy-and-hold REIT, it's a distressed asset play with elevated volatility. In summary, MPW was once a darling of dividend investors, but now it sits in the penalty box. Either this becomes a turnaround legend or a cautionary tale. If you have any videos you'd like me to cover, say it in the comments below, and I will break it down in plain English.